The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, no doubt an interesting week in the market trade as we rolled the calendar from March into April. Everything from updated USDA grain stocks data to prospective plantings numbers to tariffs and much more. There's been a lot for these markets to chew on as we've gone throughout the week. Let's talk about it, get some perspective, especially on the grain side of things. Joining us for a conversation, David Brock with the Brock Report is back with us here on the show. David, it's good to catch up with you again, my friend. How are you?
Likewise, doing good.
Well, I'll start here before we really dive into looking at the balance sheets for the grain side. As I kind of alluded to, Dave, I mean, a lot of stuff thrown at this market. We haven't even really started trading weather, I don't think, in my opinion. Maybe you have a differing opinion there, but it's felt like a lot of noise for the markets to chew through, and it's created us a fair amount of volatility this week.
Yeah, there has been a lot. I think noise is a good word for it. You look at what the market's been hit with the last few days. Starts with the planning intentions report on Monday, right? So we know that those numbers are subject to change a lot between now and final. I think it was 2019-20 corn acres were off by almost 5 million acres. So it's information the market needs and will trade, but maybe more classified as noise than fact. We had grain stocks report. And then, of course, Liberation Day sent all of the markets into shock. Frankly, commodities were almost more insulated than equities. So it's been an interesting 3 days here.
It's been just a really interesting couple of days in this trade. Well, let's take a look at some of these charts and some of the work that you were doing with the Brock Report, and specifically on corn. Let's start there. As we've gotten some of this updated data and we look at just supply and demand fundamentals, and you look at some of our trading partners and how exports are looking, et cetera. I mean, walk me through some of these corn numbers and what stands out to you. The biggest thing I've seen really as I've kind of looked at things is, I mean, it's kind of tight still when you look at the balance sheets on the corn side, Dave. Am I right?
Yeah, it is. And we'll get into, I want to take kind of a bigger picture look, right? There's been so much noise was the word, so much information. It's tough not to get lost in the details, but let's just take a minute, step back, refocus on the bigger picture. First thing I do want to say though is corn. I mean, our export commitments have been very good. And right now, everybody's interested in where it's all going because of all the tariff talk. And Mexico, obviously our biggest buyer, has been excluded from this round, and all the rhetoric has been pretty positive coming out of Mexico and Canada. So for a large extent, that's why corn performed so well. I mean, it was up 4 or 5 cents at one point today. You also notice China has got nothing on the books from us. So there's really no risk of cancellations. And then again, stepping back, looking at the export picture as a whole, I mean, if you look at our export pace in terms of what our shipment pace, we're on pace to export about 2.58 billion bushels. If you look at our commitments, we're on pace for about 2.6, the way that I calculate that. So you could argue that the USDA is anywhere from 1 to 200 million bushels light on their export projections for this year. So come April 10th, 11th, this next crop report, that's going to be something people are really looking forward to, as will the USDA increase their exports there. So, so that's kind of our U.S. picture. Can we step back for a minute and just kind of look at the global stocks for a minute?
Yeah, absolutely. What are the global stocks telling us right now?
Okay, so there's a couple ways to analyze global stocks. Your most standard is just your total world ending stocks and your stocks to use ratio. So we're right there, the tightest we've been since 14-15. All right, so that looks good. But to drill down in this a little bit more is, let's take a look at where the stocks are. So if we look at top world corn stocks holders, over 70% of global stocks are held in China. Okay, so one way that I like to look at global stocks is let's just exclude China. Okay, so if you take a look at it that way. All right, so here's our world stocks again, is this full bar. And this is the stocks, this dark blue is stocks that are held outside of China. And this is the stocks to use ratio, excluding China. Okay, so we're at about 9.5%, which is below 2011-12 and 12-13. And the only time it's been lower was in 1995, 96, and 1973, 74. Okay, so I think there's good reason to think that, we found fundamental support here. When you start talking about 1995 and the 1970s, it's a pretty tight picture. Now, you could argue, well, you can't just ignore China. There's a couple ways to look at that. So first off, let's take a look at world corn importers, right? Because we're excluding China from the use category as well.
Mm-hmm.
They're a small importer, right? So they're projected to only account for 4% of global imports, right? Not a big number. And if you look at their balance sheet, again, very small imports, tremendous stocks. I mean, so that's why we're ignoring them completely. So I think that's more important than just looking at the overall global situation. One other way to drill down even further, and I don't think many people look at it this way. Let's take a look at total exporters. All right, so the top world exporters, it's really us, Brazil, Argentina, and Ukraine. Okay, nobody else accounts for more than 2%. So what if we only consider their stocks and then we consider world use excluding China? Okay, so it's kind of getting here. So we're basically saying the stocks of the countries that export, right, corn that's available to the world, divided by global use, not including China because they're not going to import anything. All right, you can see there's a very, very good relationship between that stocks to use ratio and the U.S. average farm price. We've only been lower 3 times, and this is where we're sitting right now, right? So we got under a 5% stocks to use measurement this way. And what's cash corn in the U.S. right now? 430, 440. Mm-hmm. So I think there's a lot of reasons to be really positive corn when you step back and look at the bigger picture.
Well, and I think about this, we were chatting about this off air, and I feel like that with all the noise that's been out there and more, that this corn market futures wise has got some support, kind of I'll call it 450. It just feels like we've tested that. We can't go below it. We have support. And I love some of this data that you shared, Dave, because I think it brings up another good point of how a lot of times folks can get caught up in all the noise, but really look at what the market is telling you, the data, the spreads, all these things. A lot of times it's right there in the data, isn't it, Dave?
Yeah. And listen, I mean, any given day, the news is going to drive price action, but I do think fundamentals eventually win out. I mean, particularly in corn, right? And so to your point, I just pulled up my price charts. This 450 area in the May corn has been huge. Every time we've challenged this trend line support, it's held. And, the fact that we opened at that and then traded higher and closed neutral today looks really good. December, unfortunately, our support's a little bit lower. To me, the key area is around 430, which, listen, there's a long ways to go. We can talk about 95 plus million acres of corn, but it's not planted yet. It hasn't rained yet. We got a long ways to go. So old crop will be driving the bus. The technical picture looks really good there. So I think there's reasons to be optimistic in corn.
On the wheat side or soybeans, wheat kind of held its own with corn, kind of moving in conjunction with all the other news here this week. On the soybean side, of course, there's been a lot of ebb and flow there with the news around soybean oil, et cetera. I mean, when you look at the other grains beyond the corn market, any big notes stand out to you right now?
Yeah, I'm optimistic on wheat. Again, you look at the global picture and you kind of break it down, similar to how we did in corn. Obviously, it's different. But if you take a close look at it, I mean, global supplies for wheat, there's a bullish case to be made, or at least that we're kind of probing for a bottom here. Soybeans, I'm not quite as optimistic. And, I think everybody's right now getting flashbacks to the trade war 1.0, right, when China stopped buying and what happened there. We're probably going to take a pretty close look at that in the Brock report over the next 2 weeks, because there's a lot of similarities there, and I think a lot of risk on the soybean side. But I think wheat, and also if you look at the way traders are positioned, that's much friendlier for wheat than it is for corn, and certainly for soybeans. So I think we're going to be finding a bottom in the wheat market here soon. And technically, soybeans look good. Fundamentally, I'm a little concerned longer term.
Sure. Oh, and just thinking about all of this, risk management wise, obviously we know that, folks are going to be busy. Spring planting is going to be hitting here, in short order, as long as the weather cooperates. They're probably not going to pay a whole lot of attention to the market, or they've done their marketing, they have their plan. But just in general, what would you tell folks here as we get into this busy stretch of the year? I mean, what would be the take-home message for folks with their grain marketing right now, Dave?
Yeah, it's tough. I think anytime you're making grain marketing decisions, you're a farmer, not a trader. I think you want to be as far away from a computer screen and the daily price action as possible. You don't want to be thinking about the fact that corn is down 5 cents today, right? When we're looking ahead at a crop you're harvesting in September and October, that just doesn't matter. So, ask yourself questions about, where do I want to be percentage sold by the time I finish planting? All right. By the time June comes around, kind of look at those big time frames, get an idea for your cost of production that can't really drive your marketing decisions, but it should be part of it. I think making a lot of small cash sales when the market is really volatile like this and we're emotional is an easy button, right? It's really hard to screw up your marketing if you make 25% sales. It's really hard to screw up your marketing if you make 25% sales. So if you take that approach, it takes a lot of pressure off the decisions and makes it easier to kind of let go and hit the sell button.
Well, great thoughts. And I know you guys have a ton of data available and a lot of great folks on your team. And I know BrockReport.com, I'm sure that's a great place to get started, isn't it, Dave?
Yep. You can go there, take a trial, no credit card or anything, play around with it. And that's it.
BrockReport.com for more. David Brock, always appreciate the time and the insight. Thanks for joining us on Market Talk today. Have a great weekend. We'll talk to you again soon.
Thanks, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.